the key is this level, right? So if we did get above 30,000 and we stay there for, let's say, a week or so and establish ourselves back above that level, I think at that point, then I say, okay, listen, we're back above the psychological lows from the bull market of 2021. Now I think the low is in. But as of now, to me, this is a run-of-your-mill bear market rally. If you go back to 2018, 2019, we had periods where we were up 100 to 200% off of the lows in Bitcoin, and yet we still came down and retested that 3,500-ish low. So you can't get too excited yet when the technical level that is the huge wall in Bitcoin hasn't been broken yet. So I'm sticking with 12 to 13,000 and maybe as low as 9,000 as of now.
Okay. After several months of being consistently bearish, popular technical analyst Gareth Soloway might be finally ready to make the long-awaited switch to being bullish. In a recent interview with Daniela Cambone of Stansberry Research, Soloway shared his updated price predictions for the world's leading crypto asset. According to the renowned analyst, he would instantly turn bullish if Bitcoin is able to move past the $30,000 resistance and stay above for a few days. Soloway believes this would definitely mark the bottom for the bear market and herald the beginning of a bull market for Bitcoin and the rest of the cryptocurrency market. However, the $30,000 resistance has been a crucial psychological level for the crypto asset. Over the past few weeks, we've seen some significant price gains for Bitcoin, but it has unfortunately stayed below that crucial range it needs to proceed. During his interview with Stansberry, Soloway pointed out the similarities between the present price movements and the pre-all-time 2021 price movements. The popular technical analyst also discussed his outlook on Dogecoin, which, thanks to Elon Musk's Twitter logo switch, has seen a significant rally over the past few days. Should you be loading up on Bitcoin, Doge, or other assets? Gareth Soloway's insightful discussion might just have the answers you need. Before we listen to Soloway's interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos. Also, ensure you drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks. Enjoy the video.
Normally we see risk on being something that drives Bitcoin up, but over the last month with the banking crisis, we've actually seen risk off be a positive for Bitcoin. So this kind of a weird thing where Bitcoin, people aren't sure, wait, which one is it? Is it a risk on asset or risk off asset? And right now the price action is telling us it doesn't know, right? I mean, we're even seeing the banks selling off a little bit today, and that's not even driving Bitcoin to the upside. So the biggest thing to do here is look at the chart, and I think the chart really tells us a lot about where Bitcoin is relative to where it could go. So if I zoom out on my chart here, and this is amazing, we're going back to the levels that were the lows during the bull market, and that's where Bitcoin is hovering just underneath. And so if you think about it on a psychological basis, this is like the Great Wall of China. I mean, this is the epic wall of Bitcoin's price action. And so that explains a lot why it's having so much trouble breaking above this $30,000 level. So for me, when I look at this, I stay bearish or a suspect in terms of whether or not the bull market is back on in Bitcoin. I'm still favoring the fact that we're still in a bear market in Bitcoin until we get over 30,000 and hold above it. Because right now, this is the line in the sand, and if Bitcoin can't get through this, it's still bear market central. Yeah, so if we get above 30,000, and I think this is key, is that a break above for a day or two, that doesn't matter to me. I've seen algorithms that'll do that purposely to stop people out or actually convince people that last little bit of FOMO to jump in on board. Think about the 65,000, which was the early 2021 high, and the 69,000 level where it convinced everyone we were headed to 100,000. But if we stay above there for a significant amount of time, a week or so, then likely that tells us that we are going to head even higher. Your next leg probably has the chance to take us up towards that 35, 40,000 level probably over the next month or so. For me, as soon as the banking crisis started, I said to myself, all right, this is exactly why Bitcoin was created. This is the essence of why we need Bitcoin. But again, in the shorter term, when you see panic, like when you go back to the COVID 2020 March period where things were in really a panic central, you saw even gold selling off because during panic, people don't ask questions. They sell. They ask those questions later. And I think that's what we're coming into. We're coming into a period in the equity markets where I think you're going to get a realization there's a recession. I know we'll talk the S&P in a little while, but you're going to get this sell-off in the stock market. My guess is it bleeds into crypto and it creates more selling in crypto to the downside.
Okay.
It's so tough to know what the heck's going on here. I mean, you know, Elon Musk, again, he loves catering to the crowd to kind of the smaller investor, the retail
Yep.
crowd. And so on a technical basis, we can see that you actually had this beautiful kind of what we call a wedge pattern. It's a triangle pattern, and we broke above it. But on a technical basis, look at where we went. We went right back to the highs of February of 2023, and that's where price stalled out. So again, I think in terms of this becoming a mainstream asset, the only way that happens is if he really incorporates Doge into Twitter as a form of payment. That could then give it some relevancy. Otherwise, I always sell these type of events because again, it's I still remember when he came out and he was pumping it. He went on Saturday Night Live. That was actually the high of the asset back then. And to me, it's more you sell these type of crazed pumps where everyone's FOMOing in.
So do not buy the hype here.
Yeah, I wouldn't. It's just again, it's one of those things you could 2x your money, but you could also go to zero. So for me, when I'm investing hard-earned money, I want probabilities heavily on my side. In this case, there's not probabilities heavily on my side.
According to Gareth Soloway, Bitcoin's core fundamentals are perfect for the current economic environment, especially with the ongoing banking sector crisis in the United States and the widespread de-dollarization agenda from China. However, Soloway believes the conflagration from the overall U.S. economy will no doubt continue to impact Bitcoin prices for a few more months. During his discussion with Cambone, Soloway reiterated his earlier prediction that the U.S. economy would be knee-deep in recession before the end of the year. According to Soloway, this recession won't be business as usual because, with inflation still above the 2% target, the Federal Reserve would be unable to come to the market's rescue by printing more dollars out of thin air. Let's get back to Soloway's interview as he discusses his outlook for the S&P, the U.S. economy, and gold.
We can flip over to the S&P 500, and I think it's important to recognize that the S&P has really gone nowhere in a long period of time. That's actually not a good thing. When you have a big drop from the all-time highs and then you get into this consolidation pattern, what it tells you is there's an equal amount of buyers and sellers, and that's why price is chopping sideways, right? One seller equals one buyer. Problem is, we know the retail crowd continues to be buy the dippers. So why haven't we gone higher? The answer is smart money, big money, institutional money is likely selling into it. So ultimately, my guess is we have another leg down in the second half of the year. We retest and actually take out the October lows and probably head down towards that pre-COVID high here on the chart. So I do have a downside price target at minimum by year end of 3,300 and change. I do think worst case we could even touch 3,000. Yeah, from 4,000 to let's say 3,000, we're talking about a 25% drop from here. So again, I think the second half is going to be, this is going to be the kicker for the second half, is it's going to be a point where investors finally realize that we are definitely going into a recession and that the Fed can't bail us out by cutting rates aggressively or printing money because inflation is so high. All right, in the past, in the last 10, 15 years, any sort of blip in the screen, case in point, 2018 in December, when markets dropped about 20% in 6 weeks, the Fed started cutting rates immediately. They could do that because inflation was sub 2%. They could do what they did in COVID because inflation was sub 2%. You can't do that with inflation up above 2% or 3%, as I think it's going to stick around. And that's going to be a realization that is scary for the market. It's like a child where the bumper sides get removed. You're now open to get hurt by the reality of the market, and that's going to be pretty scary for the markets. You're going to see a big sell-off when that realization happens. So, and this is, by the way, I remember talking 6 months, a year ago with you, and I talked about how even when the dollar was up 20% and gold was only down, 5% on the year in 2022, how bullish that was, because in a normal market, if the dollar's up 20%, gold should be down 20%. And so it told us there was big money accumulating. There's no bigger money than central banks. Central banks were buying. That was an indicator to buy. We've obviously seen the price action. Now we had this little flag pattern. Look at this beautiful flag and breakout today on the back of what you're mentioning. And also the dollar is getting substantially weaker today as well. We are going to go up and attack this triple top up here at around 2075. You might get a small pullback there, but I still have it priced in that gold is going a lot higher. The momentum trade hasn't even caught up to gold yet, so I think 2,300 by year end is a no-brainer, maybe even higher. But again, I do think that gold is following the playbook of the 1970s, the same chart pattern playing out. So this is, and I've talked about this for the last year, how this is what was going on, where you had the same, like 2018 to 2020 and change. That was this run up, which lasted from 1970 to 1975. Right. We then had this sideways pullback. Even when inflation was going up, you had this pullback in gold. All right, same thing happened over the last 2 years, from 2020 to 2023-ish, early 2023, and then look at what happened afterwards in the late 70s into the early 80s, this meteoric rise in gold. So I think that's the replication. If you look back historically, this is the only period in recent, semi-recent history we have to go off of, and it really tells us that gold could have its moment here. We've been waiting a long time for gold to have its moment. It might soon be here.
What are your thoughts on Gareth Soloway's updated predictions for Bitcoin, Doge, and gold? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.